Good morning, everybody, and welcome to today's episode of Market Check brought to you by Because Bitcoin. Happy Monday, guys. Welcome back. I'm Snorlax. You guys know me as Tommy. I'm joined, of course, by Tucker, Max, Jackus, and and Dr. Will's Outlook. Also, Janet Yellen. Sometimes split personality disorder occurring with me. But I hope that everybody had a phenomenal Thanksgiving with their friends and family. Hopefully not spending too much time at the screens. I know it can be very difficult, right? I mean, Max made a comment on our Discord call this morning that, eventually he got the itch, and admittedly, so did I at times. It's a little bit hard to pry yourself away from this market for any meaningful length of time, but we did do our best, and we are back now. And we hope you brought your appetite because we have plenty of cooking to do today, even though Thanksgiving is now past us. Like Max said in the comments, all the burners are on. Real quickly, before we get to cooking and sharing that alpha, we always appreciate when you guys smash that like button before we get started. I'm sure we'll bug you again about it, but of course, like I said, it means a lot to us when you guys engage and enjoy our content. But yeah, guys, welcome. It is Monday. Last week was an absolute whirlwind of news. It's kind of hard to believe that that was only last week, and that was on like a holiday week that we had all of this Binance news and clarity kind of come into the market. So today we are having a bit of a red week on altcoins. I guess that's somewhat of a tone setter for the week. Maybe not necessarily my expectations that we just go down, but that you are seeing a bit of a risk off slant to start the week. And also, I think you had the same thing occur last Monday too, but we ultimately resolved into higher prices on the week and higher prices within the trend. So we'll see how that kind of resolves as we get into this week, right? Bitcoin is coming into a key level. I had marked out here for trend continuation. I think 36.6, 36.8 is a pretty important level that should likely generate some level of response from buyers. And I think even more granularly than that, when you trade into 36K, if you're going to trade that deep, if you lose that, I think then we probably enter the deeper pullback scenario. This is something that Will was talking about last week, the possibility of 32, 33, 34K, maybe down in that vicinity. And I think what you'll likely see at that point are some pretty heavy and optimal discounts on a lot of these altcoins that have been trending, and we'll look to maintain those uptrends, right? Even as they pull back. The best thing about trading altcoins, guys, is that they can provide a lot of volatility within that trend and still maintain their structure. Altcoin volatility locally has been pretty crazy lately too. I mean, it didn't necessarily trend over the week, right? But over Thanksgiving week, but we did have that pretty nice pullback, followed by a nice mean reversion day too. So like I said, not too much as far as a trend goes, but a lot of intra-week volatility on a lot of these assets. Great for traders. And yeah, I guess I'll also finish here with equities before we get started on some more substantial discussion. Equities have opened flat, and as we discussed last week, there's been a bit of a debate on FinTwit about, there's always this debate about the melt up on FinTwit, right? But I think here into the end of the year, over the next 6 to 8 weeks, there's been kind of heated debate from people who aren't the usual proponents of the melt up thesis. So I have found that debate to be pretty interesting. Some very bright minds debating whether or not the end of month, end of year flows are going to continue propelling price, possibly into a blow off top rally, or if we just kind of chop and continue sideways here into the end of the year, like some other very smart people are proposing. I think it could go either way, but we'll debate it here on this show, talk about all kinds of things. Guys, welcome. Would love to know what you guys are seeing in the markets. I don't think I've spoken to you guys in 4 or 5, well, probably 5 or 6 days at this point, but 3 or 4 market sessions. Jackus, I think it's been a session longer than that since we didn't have you on Wednesday, but welcome back, guys. Hope everybody had a Thanksgiving. What are we seeing?
Do you want Janet or do you want Max?
If Janet's got something compelling to say, I would love to hear from Janet.
So for my quant, by the way, just so everybody knows, my quant Janet was basically telling me to go ahead and drop the chart down to something like the daily and to go to something about, April of 2023 and look at that high there and go and compare that to where we are now with price action.
What'd you
And
say there?
Janet's usually not
April?
always wrong. What's that?
You said April?
Yep.
Okay. Thinking we're in here somewhere, huh?
Or on the lower zone, right? Either one. So we could see another rip. There's definitely a possibility here. But the point being is Janet told me this looks like a drive high. And typically when you start to see the drive highs or the vertical accumulation or the upward accumulation, you tend to see the larger time frame pullback into a previous we'll say liquidity zone. Now it doesn't have to be super deep. I've talked about this before. I think people will be bidding and trying to put prices at 30. I don't think they'll get 30, but I think there is a possibility of 33, or higher of a pullback here to kind of rebalance the move. And the H4 also gives a very similar move, very similar look here in these similar time zones as far as the way the price kind of vertically accumulated higher and higher and higher, but was catching a resistance or more or less, what we would consider in the trading world a bear flag that's going to trade back down. But again, I think the drop is more for bidding than it is for selling.
I actually don't think we're gonna dip much lower than here, truthfully. I'm here. Actually, I might just pull a Tommy and steal the screen. I know it's a little bit early for that, but I think I need to apply a visual here. It's actually
The
not
Steelor.
this. Yeah, the the Steelor. The screen disrespector is what I am, man.
That's actually my option B. Max.
I actually had this. This is not what I wanted to show you guys, but I save all my drawings going back to like
Jesus.
forever. Like, look at these folders, man. I don't delete them, man. I got all the archives.
Serious OCD, man.
The Foldor.
Thank you all for your comments. All right, when my old charts fit your personal bias, you're happy to see my 1,000 folders. All right. But I just happened to see this. We made this last week, so kind of interesting. If this does play out, this would be the dip for bidding. But I have this folder at the top here saved as low respector. All right. And then I have this one as range. All right. I don't really see why now. Actually, I'm going to delete the range first. Let's look at this. All of these lows continue to be respected, all of them. It's just like straight up in a straight line. We continue to respect the lows. I'm going to put this range on here now. It's got a nice diagonal trend line. I could see a little bit lower. Let me go to the 3 hour. But I don't really see why we would plan, while we've been in vertical accumulation since, basically the last week of October. Now suddenly we would just break. I would say that if we are going to, let's just pretend the chart as an exercise look like this. I think that it would be silly to want to, try to long right here. You could maybe look for, right here. But ultimately, if you're looking to long this, which is obviously, going short, you'd want to see this breakout, retest, and then you'd look for, something like this. But that's not where we're at right now. We're still well within this potential vertical accumulation. And I think until you see this trend line break right here, this diagonal trend line break, and even more so, this, I'll flip it back now, this range low, and these lows are now disrespected rather than continually being respected all the way up for the past 5 weeks. I don't see a reason to be bearish. You can forecast it in advance and you could say, well, that's fine. But, this little deviation up here was a huge bull trap. And now we have the fuel to go down. You could argue that, but I don't really want to short as we're getting close to, a 5-week support line. And again, here, if we're looking at lows, going down to the lower time frames, let's just look at how we have in fact respected these lows. And actually, I'll remove this volume profile. Again, right here, aggressive sell-off coming in to fill in this big inefficiency and retest previous demand. Perfect. We form new demand, come back in, fill all these inefficiencies, retest the demand. Same thing right here. Demand, we're coming back in to fill in this inefficiency. I don't think you're going to get the dip that you want. I'm not making it personal against anybody. Like, I just mean you in a general sense. I don't really see why we would now suddenly disrespect these lows when we have, a lot of support that we're coming into right now. And additionally, we have a month long or 3 week long volume profile with the point of control down here at 36.5 as we're filling in the last inefficiency. And the dip started Sunday night into Monday. What do we know about Sunday to Monday dips, guys? I mean, talk about disrespecting something.
I mean,
Typically, you want to fade that initial impulse,
I can see price remaining relatively here. I could even see the rip scenario into a dip, but again, it still fills in the April. Like even if you're at the low here and on April, and you get some kind of systemic rip up, it's going to come back in a big way. And I think that a lot of people are going to ignore this as far as the move you are before the halving, right? That's a very important part to look at. If you were after the halving, I would say, okay, we can just keep ripping, right, forever and ever and ever, because it's just how these type of markets move in a very bullish type momentum. But before the halving, I tend to look at it like you can get chopped up. I don't like to see money move within a controlled range to the high. I like to see money trade sideways. I like to see money trade down if I'm bullish. I like to see a lot of different things. And again, it doesn't mean I'm not bullish. I'm just saying like there is a big move I think coming for the long side. And I think it's going to wipe out OI, and I think it's going to end up shoving into the shorts in a big way, because a lot of people are not going to close those shorts. They're going to keep them open, thinking that price is going to go deeper. I think April, if you look at April again, it's a very similar move here. It's a very similar move. And April did the same thing, and then it ripped really high, and then it ripped down, right? That was your move between like 26 to 30K right there. If you look at it, your move from 26 to 30K, that was the move that you're talking about right now, Max. But that came back in a big way, right? It went deeper than where the rip was, which means even where we are now, you're going to go deeper, regardless of whether you rip here and or you continue to trade up.
Yeah. I mean, I agree with most of it. I just don't know this is the spot that everybody wants right here, man. Like everybody wants this spot, or at least they claim to want it.
But do you think any of them are going to bid it?
I don't know. I just think it seems a little obvious. Like if we look at really strong trends for Bitcoin, when Bitcoin is trending up or down, you don't get your retest, like you don't get the lows don't get breached.
I don't think 30K gets retested. I don't, and I think that's the low.
Well, this right here, Will, is 33.3, man. Like this inefficiency that everybody and their grandma wants.
Nobody was talking 33 until I was talking about it about a week ago. And
I'm not talking about anybody on this show. I'm talking about like sentiment I'm gauging from Twitter. Everybody wants this right here. Everybody wants this.
I don't know about that.
They do. Legit, everyone wants this. Everyone wants this. I've seen so many charts last week where everyone was saying we're gonna sweep the highs, which we have, and then we're gonna retest 33. I have seen such a huge concentration on Twitter with this, so I have to agree. Yeah. Everyone wants this, but in our own eco bubble.
Go to April though again, and look at the build up until we ripped. And you'll see exactly the same pattern we have right now.
April of what year?
2023.
You're talking about right here?
Oh no, before that drop. Before the rip.
You're talking about this right here?
Before the rip though. So that last white candle right there. So see that big rip up where they went from like 26 to 20. No, not that one.
No, that's April.
I know. I'm talking. No. So we're gonna trade higher before lower. So
I see. You want this deviation right up here.
Yes. They're gonna sweep high before they sweep low.
You're saying you want something like
up more though.
Yeah. I got you. You want something like this.
Exactly. That's where I think that the bigger play comes into play if it's gonna match April, right? You're gonna jump high, you're gonna sweep high, and then you're gonna run low. And I mean really low. It's going to take out all the longs that have been long in this thing through the entire accumulation range. And then after it sweeps that, and I think it'll be fast. I don't think it's going to be some kind of head and shoulder, inverse head and shoulder scenario. I think it's just going to be kind of some big nasty wick down that's just going to take everybody out on OI and then rip right back up again.
I mean, all of these are very possible, right? Like I can see us going higher to like 50K from here. At the same time, I can see the scenario where we retest 33K. Like all of these are possible, and it
may just be a retest 35.
Yeah,
right?
Yeah, as well. So for now, I'm just like, as I've been saying in our call a few minutes ago, what I'm looking at is the higher time frame context, which is where we've broken and reclaimed the 30 to 60K higher time frame range. And we have broken out of the, March till October range as well. So that's such a major breakout. That to me is very bullish. And then what can happen from here on lower time frames is we either continue up or we lose the levels and retest 33. Both are, I acknowledge it, both are possible until and I do not know. So right now I will look at like H12 daily structure, and what I'm seeing it being bullish, and until it at least loses 35.5K, I remain the structure is bullish, and we continue higher from here because that's certainly possible. We've seen that in 2020 after the 14K break, and we've seen that in 2019 in May as well. So both of these are possible, and in my opinion, the best play is to get in at the discounts, at the extremes, play spot mainly. If you're gonna, like, what the market makers will not allow you to do is to get in with insane RR, insane leverage, and then ride the next big pump. They will shake you out either time-wise or simply with enough sweeps. And I think that's where we are at the moment with the leverage sweeps, shakeouts, but then, it's set up for higher prices.
No, I agree, Jackus. I think pullbacks are forbidden at the end of the day, right?
Yeah.
I'm just looking at optimal ranges where I'm not going to get completely scalped out, and that I can put in bids for more buying, essentially, not necessarily selling for lower, but for more buying to add more to my positions. So yeah. I think today is like an optimal time, right? It's not a large move from where we're at right now. And I think like if we get that sweep, it's a scenario where you should not be scared, but should be looking for entries. That's why I'm bringing it up. So if people do see this play, they're looking for entries, not looking for sells.
Yeah. I mean, some people are looking for sells to 12K still, right?
I hope not.
Well, they are. They are looking for 12K, and this is a giant deviation above 30K.
Best I can do is 45K. Best I can do.
Best I can do. Yeah, I don't know about 12K, boys. I don't know about all that.
Don't worry. I'll OTC my Bitcoin right now for 48.
Yeah. I mean, I was surprised. I was surprised to see capital returning at this very moment. It was like, if you think about it, you would think he would come back when we had that drop to like 25 in September or something. Instead, he came back when we had CZ news without any follow through at the top. That's
Boot E says we haven't showed enough our like button.
Yeah, I was about to say that's I feel like that's been missing.
Dude, that really has been missing. Do you guys want me to do it?
Yeah.
I can attack this thing today. I can really lather it on thick if I need to.
Like the turkey dressing?
Go for it.
Yeah, man, like just gravy on stuffing right now. All right, guys, listen. I'm going to level with you guys. It's very disappointing. It's very disappointing that we're not at 300 likes on this video right now. So, guys, We haven't been live on here for like 4 days. We're all very like deprived right now. We basically had a big text chat this weekend, all talking about how we need that dopamine rush. We need the likes. We need it to go up. We couldn't even enjoy Thanksgiving because we didn't have likes. You know, we didn't have likes. That's all we care about, guys, is likes. That's it. We don't need money. We don't need anything. We just need likes. So, guys, please, if you are enjoying the stream and you feel bad for us that we've been like deprived for 4 whole days, please consider taking one quick moment, making sure you're signed into your YouTube account and hitting that thumbs up button. Now, guys, we've talked about how to approach hitting the like button before. We've talked about caressing the like button, very gently massaging the like button. I don't want any of that today, guys. I want that like button abused today. I want that like button. I mean, seriously, like I want YouTube to send me an email saying something went wrong with your audience base today, man. Like the amount of likes that you guys got compared to normal and the frequency of it and the power of the likes that were coming in far greater than normal. Something is wrong. You guys were the like manipulators. All right. So guys, if you are liking the content and you want to help support the channel, please hit that thumbs up button for us. It does wonders for the channel. It does wonders for the algorithm. And we've missed you guys. So what better way to tell us that you missed us as well than just hitting that like button for us? Furthermore, if you are new here, this is Market Check brought to you by Because Bitcoin. We are live Monday through Friday at 10:50 a.m. Eastern time. This is the full cast right here. You got Tucker, me, Max, Snorlax, Jackus, and Will's Outlook, who's going by Janet Yellen these days. But, things kind of change with him. We'll see who he ends up being tomorrow. But either way, this is the full cast. We are live here Monday through Friday at 10:50 a.m. Eastern time. We talk about charts. We talk about narratives. We take things seriously. We joke around. We do it all. I got to put somebody on mute here. Oh, it's Jackus. It's Jackus, man. He's making too much noise. I'm putting you on mute, Jackus. But guys, if you are new here, please consider subscribing to the channel as well so that you can be made aware of when we go live Monday through Friday. Let's see how we're doing with the likes, guys. Dang, 42. All right, that's pretty good, guys. That's pretty good. It's early in the stream. I won't bug you too much more. That was pretty good, guys. I mean, I'll bug you.
Okay, Max. I'll go and like it real quick. I'll go and like it.
Dude, Tucker, man. Tucker putting the team on his back. I mean, what else would you expect? The guy can squat like 600 pounds. He can afford to put the team on his back.
Yeah, I'm going to go hit that like button, man.
Yeah, thanks, Tucker. But yeah, thanks so much for being here, guys. It's great to see everybody back in the comments. I truly have missed being on YouTube and doing this show. It was weird. I was telling the guys this morning in our Discord call, I said like Saturday night hit into Sunday and I started to get that itch. I was like, oh man, can Monday come? I gotta get on stream with the boys. But yeah, guys, please consider liking the content and also subscribing. Thank you. What's up?
I had this same feeling yesterday. I was like, I cannot wait. I cannot wait for a calls and Market Check. I cannot wait to hear from the boys.
I know. I was looking forward to the long weekend and I had a great time, but I think I'm like addicted to markets, man. Like it's not like I have to trade all the time. I just have to watch them. Like I have to see what's going on. Because I wasn't trading this weekend. Like I didn't trade. I was just, I don't know, man. Like I don't have any vices. It's just markets. Like I just have to know what the price is. I have to know like like a trading view alert goes off on my phone and my eyes light up,
I mean, it's like you're watching football. Occasionally glance, check price. Just eating dinner, finished up. Okay, let me check price real quick.
Check price, good price.
You want to know my favorite thing? My favorite thing was when basically TradingView charged me the $59.99 for the Pro, and then sent me the promo for the $218 for 13 months, and I was extremely angry. Extremely angry.
Well, it adds on to your membership. It like compounds on if you do the TradingView sign up. So like even if you still have an existing membership going, it just like adds on.
Yeah, that's true.
That's why I never got it, because I was like, oh, I already have a sub. I don't want to pay more. But yeah, no, they hook it up, and now I have the 1 second chart, so everybody wins.
Dude, everybody when Tucker gets low time
membership.
frame charts, everybody does win. That's for sure.
Yeah. Like what you said, Max, I have membership till like 2026 this way because they keep giving me these offers with like 75% discounts on.
Me too. Mine's not 2026. I think I might have like 400 or something days, 450 days. It's a lot. I'm good for a while. Bro, it's such a cheap deal, man. They do 70% off if you just buy it all for the year.
The pro right now, the highest level is 217 for 13 months. They gave me.
No, dude, they do a higher level than that now. They made 2 new levels where you can have like 100 indicators at once. I thought about buying it, but I
thought the pro was the highest.
No. They made 2 new ones. They made 2 new ones where you can do. They like don't advertise it, but there's like a small button I think you click, and you're capped right now with premium, like what I have at 25 indicators. But if you search hard enough, you can find they have 2 other tiers where you can do like 50 and 100 indicators. I think.
Let me ask you guys a question. Who in the H is using 100 indicators at once?
I could think of a couple people that probably.
Bro,
why are we not using the 1 second chart though, guys?
If you're using 100 indicators,
why are we not on 1 second chart?
Tucker, let's go to the 1 second chart. This is whoa. What is this? The 6 hour, 8 hour? No.
Yeah, we are pumping, guys. Insane pump.
Tucker, go to the 1 second, bro.
Go 1 second.
There's no signal in the 6 hour chart. Come on.
Oh, pump. Big pump.
Look at that. Respect the pump.
wait until it wipes out that whole position within like $10.
Yeah. They're $5 increments on the right.
Also, Tucker, you're kind of lagging for me today. I don't know if anybody else is seeing that.
I am. Yeah.
Yeah.
Tucker's the lag or
I'm
oh shit.
Shit. I texted you.
0 guys. Oh, this is not good.
Respect the dump. We're going to 12K. Okay, just respect it.
Dude, we are not going there, Will.
We are so back. We are so back, guys.
Look, if that's what I gotta say every day for price to go up, that's what I'm gonna do. Okay, I'll just say it every day. Everybody will counter trade me, and then the price will go up, and little will they know I'll be in the market.
Dude, imagine trading the 1 second chart seriously. You know somebody out there like only trades like the 1 to 5 second chart. And
yeah,
look at that thing, man. How do you even?
I've seen some pretty.
You need to go higher time frame and go to 10 seconds.
Let's go 10. Let's go 10. Yeah.
I've seen some scammy scalping programs where like people are like trying to teach people to scalp, and they're telling them to like switch between like the 15-second and 15-minute.
It's over. It's over.
It's sorry, Will. It's ogre. Sell everything.
12K.
Guys,
bro, but for real, like I actually think we're probably like around here, guys. I'm serious. Like I think there's actually a chance we're right around here. I want to talk about this chart, and I want to get your guys' thoughts.
Hold on, are we 6 months after the halving?
I'm not saying anything about any halvings. I don't even know what a halving is, Will. I'm just talking about.
Yeah, you do. Yeah,
I see Tommy pursing his lips. I want to hear what Tommy thinks about this.
Tommy knows. Tommy knows.
Tommy wants to comment on this.
I don't know. I'm a little bit skeptical that we just literally go vertical from here, but no, I mean I'm open to it. I have prepared for the scenario. I don't really have like a set plan that I'm necessarily following here as we trade up here. I guess what I'm saying is I could see a few different things playing out, right? Like I have prepared for a scenario where we literally just rip straight up from here and we don't stop. I've prepared for a myriad of scenarios, as well as, ones like Will has, where we pull back a little bit and then maybe base out and send higher. I also have prepared for a scenario where 2022's price action is to present is essentially the price action that we saw in 2021, just more elongated, which would imply that Bitcoin's still going to trade up to 40, 50K potentially over the next 2 or 3 months. And then we'd go from there, right? I mean, that's kind of what I said in the Discord. I think the best play for me is going to be patient. Given that, I don't think that Bitcoin, I don't know that Bitcoin's given enough signal for me to determine whether or not I think we're just going to go parabolic or whether or not we're going to, have a longer base. I know that's kind of like a nothing burger answer, but
no, that was good. And you're prompting my next question. You started off by saying you prepared for both. Would you, without showing all of your cards, would you please tip your hat a little bit? How have you prepared?
I mean, just some bags that I would potentially buy. I chart patterns, Max. So I have a lot of patterns on some altcoins that I think look very bullish. If Bitcoin is going to cooperate here over the next few months, I talk a lot and I trade a lot of Sol. I think there's going to be opportunity in Sol if Bitcoin is going to continue its parabolic ascent, because that's something that we talked about on this show. It's, that's the altcoin with the highest correlation to Bitcoin. Not any other altcoin, not ETH, but Sol. So if Bitcoin's going to be rallying the hardest and just continuing up vertically within this, the context of this move, then I don't think that Sol has completed its move either. But I will say I am, in any scenario, getting very, very bullish on altcoins for Q1. I think they're going to be an asset class that outperforms pretty dramatically. I don't know how much more upside I'm expecting from Bitcoin in the immediate term, but I am getting very bullish on the potential for some of these altcoin charts. And, by a proxy to that also means ETH.
Yeah. Well, so what do you think about this Sol BTC chart? You talked about the correlation between Sol and Bitcoin. And I know this chart's not going to paint the tight correlation. But I mean, does this look kind of toppy to you? Like, are you expecting Sol BTC to come down into this region and reaccumulate and then go up? Or what do you think about this chart?
I guess, yeah. I mean, I guess it kind of depends on what the next few weeks look like, right? I mean, if Bitcoin's just going to rip up aggressively, then I'd probably expect Sol to continue ripping and outperform it. But if Bitcoin's going to have maybe a bit of a consolidation, a cool off period, Sol would probably bleed more against USD than Bitcoin would. And I would expect maybe we trade into that gap, fill that before eventually trading higher on the Sol Bitcoin pair. And I think Sol USD pair, I would say that's probably my base case, is that we get some sort of pullback into the low 30s, maybe not quite as deep as people are looking for, but 33, 34K, I think is definitely doable. Kind of in line with what Will's outlook is thinking.
Yeah, that's fair. Tucker, what do you think about this chart, brother?
I think it could happen. I think you've got to have the invalidation, at least on RSI. Probably 50 would be your level. Just looking at it from here, you need to see it bounce at 50. But I mean, what would this imply? This would imply like money printing, ETF approval, like, that's why it happened the last time, right? That's, post-COVID money printing.
Yeah, good.
So I think, yeah, you need something fundamental. I don't think it would just, happen. I mean, I think, a lot of people are sidelined, right? And that would be, I don't know if it's max pain, but that would be painful for a lot of people to go, to 48, 50K. That would be, somewhat painful. So I don't know. I think it could happen. I think you need some fundamental cooperating factors for sure, though.
Yeah, and something I'm talking about, like money coming in, right? You said something needs to happen.
Mm-hmm.
Like we're gonna need, like, I don't know, government intervention or big institutions, intervening and throwing money at it. I'm really focused on USDT dominance right now. I still think there's like another push up here. I think that there is. I don't think we're gonna go vertical in like the sense 2020 and 2021 like we were just looking at. But I think we can go vertical enough where USDT dominance could come down. And this is inverted, by the way. The actual chart looks like this, but it makes more sense to the eyes because we're used to looking at, this is like, basically it looks like a sliding contango Bitcoin chart with some divergences. But I am expecting us to come up into this area, 5.4 to 5.25, maybe 5.0, depending on when we get there. But yeah, I mean that would potentially imply here. Let's just dubiously forecast this out, right? I mean, I think a really hot level be. I'll make this thicker.
There we go.
Hey, all right. That's on Bitcoin. I don't know about ETH yet, Jackus. I don't know about ETH yet. Maybe. But
I think what's important to mention with this chart is also that whenever the USDT, market or dominance goes up, I mean down, but now it's inverted, so up. That's one hell of a move for BTC or ETH or generally crypto, because as you get USDT acceptance or adoption, you can see that it's trending downwards, like upwards in a long time. So whenever you get a move against it, right, they are inversely correlated, but you still need to account for the adoption of USDT. So a small move upwards in this case on USDT is one hell of a move for BTC or Ether. I think that's important to mention.
Yeah, good point. Something like this. But we could certainly go down before. But if we're talking about something needs to happen, and I agree with you, Tucker, would you consider the aggressive redeployment of sideline stablecoins to be enough of a catalyst to consider something happening?
To get to where?
Say 45K. 50K maybe.
Yeah, 45. Yeah. I don't think you need an ETF approval to get back to 50K. But
if we see stablecoin dominance decrease by 20%, you think that's enough of a catalyst to really send us higher with haste?
Yeah, probably. But if we're talking about like the fractal chart that you had overlaid from 2020, or was it 2021? You would need something. Yeah, you would need something more, right, to get that kind of move.
Yeah, I don't think we're actually going to do this. I think we're going to stop it'll never be the exact same, but I think it'll be somewhere around here.
Yeah, I could even see that, just that first or second consolidation.
Yeah, I don't think it's the same at all. Like the environment is completely different, but
yeah. Like imagine, guys, everyone that was on the bearish camp, and there was so many people prior to this move. So like anyone prior to October had their bearish bias. Everyone that was bearish was either sideline or short. Now with this move, this is the context or the story we need to see in the chart. Anyone was waiting for lower, right? They were waiting for 22Ks, 20Ks, whatever that number was. Instead, we got it upside. We've seen lots of bears, not all. Like we know that Capo is still bearish, waiting for 12K, whatever meme. But many of the bears said, "Hey, we are bullish now. I am waiting for the pullback." Right? There is lots of people like that, and probably institutions as well. So where are all these people waiting to get in? Right? Well, obviously, anything sub 33K. So what happens if we don't get there? Like the ideal scenario, I still think, is that you want to make these people FOMO into the market, right? So you do that by sending the market higher, make them FOMO like 45, 50K, whatever that number is. And then later on, make them sell the support they initially wanted to buy. And I think that could be the play here still.
I will say, I think the most immediate term fundamental catalyst is actually going to be on the back of the Bitcoin ETF. Once it gets officially approved, I think that is actually probably going to be when you start to see a big rotation into altcoins and ETH. Because right now, it's one of those things where everybody is kind of front running other people. You're seeing Bitcoin continue to take the bid and the focus, as far as TradFi and institutional players go. So once you finally get that announcement, the front running is gone, and you know, we'll see what the inflows look like into the ETF. I think that's another narrative that's going to be very important to track as far as, you know, Bitcoin price on a higher time frame. But after that announcement is official, I do think you're probably going to see the front running of the next ETF start to occur, right? The Ethereum futures, or maybe spot ETF, but probably more so futures ETFs. You're going to see more narrative about ETH being held by institutions probably start to emerge at that point. And I tweeted something kind of similar to this a few days ago, that I think that's kind of why you are seeing ETH struggle to catch a bid, is Bitcoin does have that appetite from TradFi, right? I mean, we can talk about crypto natives, but what's really driven up this rally is CME. CME futures are at their high. I think they're at their highest level of open interest possibly ever, which I do think is really interesting. But it's also probably a signal that, you know, once we start to move out of the Bitcoin narrative and into the Ethereum narrative, you see some rotation, not only into altcoins, but of course, you know, some institutional FOMO, or maybe just TradFi FOMO, because it might just be retail buying the CME. But given that it is a futures product, but you'll probably see that rotate into ETH after that occurs. That's kind of my thesis at this point.
By the way, while you mentioned CME, I think what's also interesting is that during the FTX drop in November 2022, we've seen the highest volume on CME. And we have also seen the highest volume on Coinbase and Binance. Highest volume. And I remember back then, I actually have a tweet about it, but I remember people back then, and I was thinking this is the excuse they will want to make you think. So back then, everyone was saying like, hey, that's the, zero fees on Binance, blah, blah, blah. By the way, it was zero fees only for retail, not for the VIP. The VIP had, they still had lower fees, but not like completely zero fees. But like still, everyone was making an excuse that's because of the zero fees, and then volume doesn't matter. But when I look at the volume on Coinbase, on CME futures, and on Binance, on all of those exchanges or like markets, the volume was the highest during the FTX drop. So I still think we don't ever go below that low, ever. That was the big capitulation and accumulation too.
Yeah, I actually remember CME having a ton of interest at that level. I don't remember if it was long or short biased, but you could definitely make the case that it was short biased and got rebalanced about 2 or 3 months later, after the initial puke, of course, right?
Do you guys think that Coinbase is going to be playing a big role with all these spot Bitcoin ETFs?
Oh, this is another question I had for you guys. Like, do you think that, I don't actually know, but do you know if all these institutions, like let's say BlackRock, but there will be others, of course, will be buying, because they will probably have a deal with Coinbase, right? Like there is no chance it's going to be something like Binance US. So it's probably going to be Coinbase and the exchange they'll be using for the buys. Are they going to be buying OTC deals, or are they buying from the open market? Because that's a big deal in my opinion.
I would want to think they probably have OTC deals rather than just like bidding. Yeah, because they're gonna be very, very aware of the fees that they're paying, and I think they'll be able to work out much more flexible rates. But also, I don't know, maybe not. I would think it's OTC, just given the quantity that I think is going to come in, but I'm not sure.
And knowing how people are greedy, which is not bad, but it's the way it is. I would also think that possibly BlackRock made lots of OTC deals with Coinbase already, which is also possibly the reason why we are moving higher so much. not the primary reason, just another confluence. But like what they could do is that they made lots of OTC deals already, and then when the spot ETF is announced officially, they'll have all of those BTCs from these lower prices. What do you guys think? I mean, it's all just a speculation, right? We don't know. We don't see in their books, but
I don't know that the entry price is as important, since it seems like they're taking the kind of a similar stand, not quite like Grayscale, but to the point where the custodianship and the fees that they're going to collect from interest in the product is probably how they're going to be making a majority of the money. But I kind of am in the camp that they're probably doing some sort of, maybe not quite OTC, but maybe low transaction fee type of service through Coinbase. Because if their profitability is going to be around custodianship and just kind of holding the asset, it makes sense to absolutely minimize the fees as much as you can, right? I feel like that would probably make the most sense to me.
Yeah. But I was also thinking that they could make a huge profit. Like if they are expecting huge interest on the approval of spot ETF, right? So they'll have the approval, and many institutions will come in and say, "Hey, we want to buy," right? So if they already made some OTC deals by now, and they made them, let's make an average like 28K, and by the time the ETF is approved, the price is, let's say, I don't know, 40, 50Ks. They just made a huge profit just from the price appreciation. That's how I would play it if I would just pure financial shark.
Man, Coinbase looks good, guys. Coinbase looks real good.
Yeah, it does.
Yeah. I'm just doing a little speculation here, man. It could be lagging. It certainly could be.
I wouldn't. I don't know. Like I wouldn't really necessarily look at it like it's going to lag the whole time. Like coin is again, it's like mining almost. It's like you're buying a safety net to get entry to an asset that has more value than your safety net, and so the value of your safety net is going to be less value than the value of the actual asset. And so I don't think coin will exceed Bitcoin as far as upside, but I think it will follow Bitcoin, but it'll lag behind and not necessarily create.
But we're talking about leaps, Will. We're talking about leaps. We're not talking
leaps.
about
Leaps are a different conversation.
We're not talking about buying spot Coinbase shares. We're talking about buying leaps.
All right.
Yeah.
That's
By the way, what do you guys think is a better buy, Coinbase or CleanSpark?
CleanSpark all day.
Me too.
From here, probably CleanSpark.
Me too.
I think let's take a look at CleanSpark, man.
I suppose the only way why you want to buy Coinbase here instead of CleanSpark is actually having voting rights on Coinbase, like some big shark like BlackRock or so.
Dude, look at this chart, man. This is so perfect.
It's unreal.
Oh my god.
Oh, I forgot to mention it on the call.
Look how perfect that was.
Yeah.
Unreal, man.
The easiest 10x you'll ever see.
I didn't buy enough.
No,
I got a decent bag, but I didn't buy enough.
I'll buy Bitcoin if I want exposure. It's really that simple.
I mean, CleanSpark gives you a higher beta. Yeah.
If I want beta, I'll buy shitcoins.
Bitcoin's not gonna. I don't think Bitcoin 10x's from here in the next cycle.
My shitcoins will.
CleanSpark will.
I still think, like, I cannot help but everyone has agreed that BTC will have diminishing cycles. Everyone. And I think everyone is going to be proven wrong.
But we already have had diminishing volatility, both up and down, Jackus. That's not like a theory. We've already had that.
We had that, exactly. And everyone is expecting to sell BTC at around 100Ks. Everyone. I think lots of people will be surprised when we get higher returns this cycle than the past one. I'm not saying we're gonna get like something crazy like 2017. I do not think that, but I think we're gonna get higher returns than we had in the 2020 cycle.
I think there's potential for like maybe 135. That's kind of my high end range target. I think just people's expectations of a quarter million or quarter billion. I don't know if that's really gonna, or not billion, quarter million, actually is gonna come to fruition. Quarter million, but
Hey, there's
you get
some
what I'm
people
saying.
out there, Will. There's some people out there.
Yeah, I think 200K, 300K is like
I
it's really
suppose.
stretching.
I suppose what time frame are we looking at?
I'm looking at this cycle. 2030 is a different conversation. I think 2030 is the breakout of this kind of round top scenario that we're kind of playing out here.
Yeah.
I think if you're looking for the big move, I think it's 2030. That's going to be the massive move. I think you're going to have institutions already in place. You're going to have everything already set up, structures already created, and you're going to see some kind of ridiculous bull run in 2030. I think.
I still think this is my thesis that I'm currently playing out is that we get this giant reaccumulation between 30 to 60K. And then we run this cycle based on the commodity cycle and we outperform. And I think the 4-year cycle is a meme. I think halvings are a meme. I'm not saying they do not matter. I'm just saying that people looking to play them will be proven wrong, just like the guy, with the stock to flow ratio.
Oh yeah, I know what you're talking about. Yeah.
So I think halvings and 4-year cycle is a meme, and I think this cycle we're gonna get, like as I've been saying, we're gonna go to like 50, above 50K, distribute around there. Then we gonna hit the recession because we need to apply. We cannot take fractals, just like Tucker was saying earlier. We cannot look at 2020 on the daily time frame and think we're gonna get the same fractal. Because back then there was lots of money printing, and we still need to understand that there will be lots of problems within the economy and the recession coming. I cannot say again if it's going to be. I cannot say exactly when the recession is gonna come. I've outlined my indicators for it, but I still think we're gonna see giant reaccumulation between 30 to 30K. So like 30K. So sorry, we go to like above 50. Then maybe we have the giant sell off to like 30, which is 50% retrace. This takes maybe another year. And I think, and this is obviously a speculation into the future, because we gotta go from level to level. But I think we're gonna surprise people and go higher than they expect. I think I could see people selling 100K. That's a big psychological number. I could see them selling like in profit 100K and then buying back at like 250. But that 250 could come 2026, 27, 28, who knows?
But Jagus, let's look at this chart here real quick. All right, so we do have diminished volatility both to the upside and to the downside, right? Like it's every single cycle. The first, I'm excluding this shit over here. This doesn't count in my opinion.
I don't think you even should count the bull market of 2012 and 13. You can count the bear market after though.
I mean, Bitcoin went up to $1,200. I mean, that's a real asset at that point.
Okay.
After the first halving, I'm gonna count it because it's off of like a cycle theory.
Yeah.
58,000% from low to high, then 86% drawdown.
Yeah.
12,000% bull market, 84% drawdown, so slightly less than the previous one. Diminished volatility both ways. Last cycle, after the third halving, we went up from low to 69K top, 2,000%, and then we only went down 77%.
Yeah.
Even if our returns get cut in half going into this next cycle, like even if Bitcoin's volatility to the upside gets cut in half and we go up 1,000, 1,100%, that's still Bitcoin going to 190,000 next cycle. I don't really care if we have diminished volatility to the upside and to the downside. And I also wouldn't mind something like this playing out as well, where instead of going to, so we went minus 86, minus 84, minus 77. What if we only went, minus, minus 68 or something like that, And this was our next, and the next bear market takes us back to like 70K Bitcoin. I don't think it'd be the worst thing in the world for a maturing asset class to have diminished volatility both ways.
Oh yeah, I mean I do agree with the diminished volatility. That's just happening based on market caps, and I kept on saying that like the higher the market cap, the lower the returns on both sides. That's whether you want to play Bitcoin versus gold or whether you want to play Bitcoin versus altcoin. Just altcoin's gonna outperform on both sides Bitcoin, and Bitcoin is gonna outperform on both sides like gold and silver. I do agree, and that's been my long-term thesis. And I'm just saying that we need to apply the asset class to the current world market conditions. And in the prior cycles, we had zero interest rates, and the world was trying to see like what Bitcoin is. Is it here going to stay, or is it going to zero? Is it just a Ponzi? What it is? Right now, we have a consensus that Bitcoin is here to stay. The institutions are onboarding the gateways, but we still need to apply it. Like, if there is a recession coming, and we didn't have recession in the history of BTC, it's going to take its count, just like it had during COVID, right? During COVID, it sold off. It's not going to be different during recession. But if we are getting a commodity cycle, which I think everything is pointing towards it, then Bitcoin is gonna, run on the confluence of wide institution adoption on the commodity confluence. So I think this cycle is going to ride a lot based on that, and that could mean big percentages returns, higher than most people are expecting. And then I think we could even have a prolonged bear market, right? When commodities are down, and they will, the rotation will come just as with any asset. Then the commodities will, slow down, and I could see Bitcoin being in a bear market for even like, I don't know, 4 years, who knows how long. That's why I think this is like the last cycle to make real big returns for a long time.
Yeah, I mean, I don't disagree with you. I mean, we've all seen that Bitcoin chart. I'm trying to find where it is. It's like the favorite Bitcoin maxi chart, where it does something like this, where we get the the S curve adoption, and it's like this, that. We've all seen that chart. I don't know where I would find it, but you guys probably know what I'm talking about. But it's basically like this. All of this price action right here for Bitcoin hasn't even really been like adoption yet. This has literally been like the lead up to the actual adoption. And once we get like a spot ETF and more countries start adopting Bitcoin, then the real adoption happens, and Bitcoin, like hyper Bitcoinization, kind of happens. And
by the way, Max, now you just give me that I don't know what's the word for it in English, but like you give me the idea of, I was thinking, El Salvador adopted Bitcoin during this cycle, and they were in a decent drawdown during big part of it. But if BTC starts going up a lot, they will pay all their debt, all their national debt, and the country is thriving right now, basically. The criminality went from one of the highest in the world, if not the highest, to one of the lowest. They have lower criminality right now than New York. And that's something to say for a fucking third world country. And what I could see happening is that in this next cycle, people are always like, where's the liquidity going to come from? Who's going to buy our bags? I could see lots of these banana countries, saying how El Salvador is making profits. They'll be like, hey, I'm going to, we are going to adopt Bitcoin and, be like the next El Salvador. And they will start buying, lots of these banana countries are ran by the same apes we all are. All these politicians, they are usually even dumber than we are. and and they are running the countries. They're just, they've been born to the right family, to the control, And I could see these banana countries buying at the top of the next cycle. I could see that happening. It's just my
Do you
speculation.
think that a lot of these like South American countries are going to end up buying retail bags at the top of next cycle?
I do think so. I think that's highly possible.
Yeah,
I mean, some of them, like Argentina, could buy now, but lots of the African countries and maybe South American countries could start adopting at the top of the next cycle. I could see that,
It's funny because a lot of people, that when we talk about institutional money coming into the space, people always assume that is smart money, and it's not.
Yeah.
It's not. Institutions bought the top in 2021.
Yeah. Like people think like these institutions are some fucking robots with 200 IQ, but in reality, they are ran by the same people that, have the same or lower IQ usually than us. And sometimes the retail investor is smarter than these guys, Sometimes all these guys have is just insider knowledge though, right? But like the retail investor needs to do his own due diligence. He needs to do way more work than the guy to be successful than the guys above. And we've seen that, during 2022, we've seen that basically lots of institutions, like I think 2/3 of world institutions were heavily underwater. I think we are sitting right now on one of the largest unrealized losses in history. And some institutions reported like they've basically wiped out 40 years of their gains in the last year. So like, there's no smart money.
not just that, Jack. Like these guys literally came in, like not just institutions, like big money, like big players, right? You had Mark Cuban and many others get washed out buying NFTs and everything else. Not saying that those things won't pop off again, but you had them all kind of jumping on train with the same crap across the board, and they all lost money on that. They lost tons of money on it because they really have no clue what they're doing. They can sit there and say they do. Honestly, a lot of them, I think their money came from being at the right place at the right time or taking advantage of the right person at the right time, right? And it's not necessarily that they're smart people or they know how to invest correctly. And this is why when people sit there and look at them, and this might be a hot take, and may ruin my career on ever being on what is it, Shark Tank or whatever. But at the end of the day, like these I watched them all. I watched them all just get completely rinsed in 2021, 2022, because they thought they were buying at the right time when optimally every single one of them were wrong. Even retail, like Nike, they all came in and got destroyed. And like people were calling tops and they were like, "Oh, just keep buying, guys." And they were causing more FOMO to come back in. And people were like, "Well, the institutions are exiting on you." It wasn't the institute, no. It was the people who have been in crypto, who knew the game. They exited on all of institutions. They exited on smart money. They exited on dumb retail. That's how this game is played. It's the same thing in the stock market. People think they're sharks. They're not. They're not. None of them are.
I'm going to tell you right now, there is nothing that would make me happier and probably laugh harder than seeing Will go toe-to-toe with Kevin O'Leary on Shark Tank.
Oh my God. It would be phenomenal.
Phenomenal, man. Phenomenal.
Dude, Kevin O'Leary, I have a lot to say about that guy, man. Just like,
I know you do.
I'm sure you do.
I would love,
man. All you need to know, look, 2025 Q1 exit. That's it. From now until then, buy the dip, man.
Tucker, I got this. Go ahead, Jackus.
I just wanted to say I'm also bullish on new generations growing up and learning how to invest, learning to gamble money in the markets, because lots of new young people are realizing the system is completely fucked, and they are entering the markets even at a sooner age than we were. And that's a lot of new liquidity too, I think, and lots of new market participants. And all these, by the way, all these people, they're probably not going to be buying gold. They'll be buying lots of crypto. If you ask, most of young people are, maybe some of them are buying stocks, right? But bonds and gold and silver, I mean, they are very useful. They are being bought by large institutions for being so conservative. But lots of new guys will be, and they are, all the new generations are understanding that they simply need to invest. They need to learn how to speculate on the markets, and lots of them will be getting it wrong too.
You,
But it's
you want
lots of
you
go
want
on.
the most alpha out there. It's literally here's how it works. It's growth and then preservation. You got dumbasses sitting out there telling people, excuse my language, that hey, preservation is the place to put your money for safety. It's like you can't preserve if you don't have anything. You have to grow
Yeah,
first and then you
yeah,
preserve. That's why when
yeah,
you're following Warren Buffett, he's in preservation mode. You're following the
yeah.
wrong guy
That's a great
completely.
point, Will. That's a fucking great point, Will. Exactly. Like lots of that's the reason why so many young people are in crypto, because they simply don't have anything, they cannot buy anything, and they are looking to make it in the world, right? And that's what I mean. It's a casino. I in a way, I agree with that, but lots of them, they simply won't be buying bonds or so in this fucked up world.
I can tell you this: like people who bought Tesla, right place, right time. People who bought Microsoft, right place, right time. Everybody treats them like they're freaking geniuses. No, right place, right time. Right? They bought, they probably got wrecked. They're like, well, might as well leave it. It's already wrecked now. And then they came back in later on and found out they were rich.
I mean,
That's
I've
just how
I've
it works
talked
out.
about this at length. Jackus and I actually, before Jackus joined the team, we did a really long, like 2 hour stream together. And we either talked about it on stream or off. I can't remember. But we had this whole in-depth discussion about our parents' generation and talk about right place at the right time. I mean, most of our parents' generation is sitting on, millions of dollars of potentially unrealized gains from being beneficiaries of, the largest economic boom that we've seen since the Industrial Revolution, right as they were exiting college, you know? And then
Yeah.
also they were also beneficiaries of the single family housing market booming. They were beneficiaries of the fiat based, debt collateralized money system, and we ditched the gold standard. They've been beneficiaries of the largest inflationary bubble as long as they were holding assets over the past 5 decades. So it's like, talk about right place, right time. If you were just a very conservative but consistent DCA style investor, and you're like 50 or 60 years old, you should be worth like 8 figures minimum right now, just as a result of right place, right time, you know. But you go back, a little bit further, and things weren't so easy for everybody, But again, if you're 50 or 60 years old and you've, been contributing to a 401k account, you should be set. You should be like completely set because of right place, right time, and your house should be 10 times the value that it was when you bought it.
Yeah, and this is the problem with a lot of these bigger guys that have big portfolios or manage big money. Like they're too smart for their own good. They ruin their own growth potential because they're like, oh, look at the bond yield, look at the adjusted, look at this, look at that. And yes, those things they all matter to a degree. But where's your growth in your portfolio? You don't have any because you're like, oh, I got to be safe now. It's time to be safe because everything came down 50 to 80%. So I got to be safe. And when you think like that, at those points, you're not taking advantage of the real opportunities in the market. Again, I'm underwater on multiple positions that I think are going to be exponentials in the coming years. Like I'll give you one for example, Lucid. It has not been the best freaking mover. I'll tell you that. I'm underwater on the position as far as me positioning on it, but I continue to DCA down and let this thing dry down because I see value in the company. I see the value in the people that they're positioning with. This is the same thing with Tesla. I was in Tesla before the first split. It looked like complete garbage. It looked like trash when it first came out, and everybody talked shit about it, and everybody hated on it. And in the first split, now everybody's like, "Hey, Tesla's like the gold tier of everything." And now everybody's on board, right? So I need to move on to the next shiny object that nobody wants to touch.
Yeah, yeah. That's those are some actually great thoughts we are discussing right here, I would say. And I think the same can be applied to lots of early Bitcoiners, right? Lots of them will tell you how you want to play the capital preservation and just be in Bitcoin, or maybe even in Ether. But there's still lots of people that want to make it big. And that's why lots of people will be always in alts and looking to outperform the market. I think that will always be the case. But it also comes with a higher risk. And that's obviously hard to play, especially if you are new to the market.
Dude, it's an unbelievable environment out there right now. Like, you don't, as a young person, you don't have a choice.
Yeah.
You literally do not have a choice. And I'll explain it from my own shoes what I mean by that. I am almost 28 years old. I make, based on the statistical averages, I bring in like a lot more money than the average for my age. Okay, that's not like I'm a multi-millionaire, but based on the government issued averages for what people make based on what age you are, I make significantly more than the average 27-year-old, okay, on a monthly and yearly basis. Okay. I literally, in my hometown, I cannot afford to buy a house for my wife and my kid right now. I cannot afford to pay for one. Or let me put it this way. If I decided I wanted to, it would be very difficult and frustrating to have to pay for it. And I don't have a choice. Like, I'm working my hardest. I'm making significantly more money than the average person that's my age. I have a college degree. I have multiple businesses that I own that are cash flowing and doing well, apart from Because Bitcoin. And it's basically unattainable for me to buy a decent home in my area. All right. So you don't have a choice. Like, if you want to make it, if you want to have an above average life, you have to take an immense amount of risk in this environment. You don't have the luxury of just getting a little like cushy job and slowly contributing to your 401k, and then suddenly you're rich and you just keep upgrading houses every 7 to 10 years. You can't do that anymore. Like, that time is gone. I have to buy crypto. I have to trade with leverage. I have to chase beta. I have to buy 10 Kanpai pandas. Okay. I have to do all these things. I want to do the last thing. Yeah, bet more. But the last one is a joke. I actually do own a bunch of them, but you get what I mean. Like, I have to invest unconventionally because times are, excuse the language, they're fucked. They're completely fucked. You have to push it if you want to have an elevated lifestyle at all. And it is what it is.
And an elevated lifestyle for some is just going to a restaurant every weekend. Like it's honestly ridiculous how much costs are and stuff like that compared to what people are actually making. I'm not saying like I'm necessarily in that boat, but I know a lot of people that are. They're barely able to make ends meet as far as even just cutting bills and cutting food. And
if I showed you, so I have one kid. I have a 5-month-old and I have a wife who is not working right now. If I showed you what I consistently bring in every month and how tight our budget still is, you'd be like, this is literally like messed up. There is no way he should even have to be budgeting right now. I have one kid. I live in an apartment, like, it's nuts out. It gets completely nuts. And that's why I want there to be a major recession, because things need to change. Like, it's completely unsustainable. It's completely unsustainable and broken. And it's unfair for young people. But, I also recognize that as unemployment goes up, people die. So I don't want that. So it's kind of like, I don't know. It's not my fault. It's not your guys' fault, but things need to heal. It's messed up.
Do you know what needs to change? It's why we are here. It's the fiat system. It's very obvious if you look at the raw data, and you can look what the fuck happened in 1971, and why you are explaining the problems you are is because of the fiat world, and it will only get worse. But what I learned is like you are saying, the recession needs to happen, and things needs to change, and I mean, this is the realization I came to. Things need to get worse before people really understand and they are fed up with the current system. And that's why we are in BTC and so on, because we need the world to run on sound money again, because the current fiat system is just giant Ponzi scheme that's rewarding those at the top, and the gap between the working class is getting larger and larger. That's simply the fiat system, and that needs to change. It's going to get even wider, and the only solution to that is really returning back to the sound money, and then you will once again be able to invest in normal stuff. You will not need to chase higher beta anymore. But until that time comes, that's unfortunately the time we are forced to live in. Everyone is forced to being an investor now. Everyone is forced to be a speculator at the markets and look to protect their wealth against inflation, whether you like it or not. Even if you are in a bank, if which is, by the way, funny. There's a saying: you think you have your money in a bank safe, while you realize it's not your money, it's not even the money, and it's not even the bank anymore.
So yeah, it's this perception. My money is in your house. Your money is in my boat. His money is in her car. Like, it's talk about a Ponzi scheme. I'm pretty sure that most banks are leveraged like 9 or 10x. Okay. Now I'm gonna pull this up real quick. This is S&P 500 adjusted for the M2 money supply. Congratulations. If you bought equities up here, in the 90s, adjusted for the increase in the monetary supply here, you're screwed. Like, what are we even really talking about here? I mean, there's no advantage to just DCAing into the S&P 500. Going back to what Will was talking about, all you're doing by DCAing into one of these, Vanguard ETFs or, SPY, whatever, S&P 500 ETFs, you're literally just preserving your wealth. If you've been slowly DCAing into the S&P 500 since 2001, congratulations. You've basically been trading in a giant range. And here's what's going to end up happening. The exact same thing. Ready? Watch this. Range theory again. Okay. It's always just giant ranges. Now we're going to enter a deviation up top right here. And then we're going to go back down into the range. Since 2001, you haven't been picking up any purchasing power while adjusting for the increase in the money supply.
Zero PP.
Yeah, so look at this. Like, what am I supposed to do here? Do I want to get ahead in life? Do I want to invest smart? Do I want to just preserve my wealth and basically just track the increase in the money supply? Or do I want to have more money? I don't have a choice. Neither do you guys. You don't have a choice. You literally don't have a choice unless you are old enough to invest down in here. If you were investing down in here, then you're slightly ahead. Okay. If you were investing down here, in the 70s and the 80s, congrats. You've been, doing okay. But that's it. You've been doing okay. You don't have a choice if you're young. Nothing. You have to chase it. Learn to trade. Learn to look at pairs.
You can't touch any of those high caps. You can't touch any of them. Even for me, I'll be real. Like, I still dabble in Tesla, but Tesla's even off limits at this point. Like, I have no growth potential there anymore.
Dude, right? I wouldn't own any spot. I'd only play options on them. Like, you have to push it. It is what it is.
Exactly. And so many people fade that. They'll be like, well, Tesla still can go up another billion, trillion. Like, dude, come on, man. Like, just think with your head. Like, there's no growth in that.
Everybody looks at these young people and they're like, they don't know what sound, smart investing is. They don't know what dividend investing is. And I'm like, I don't want your 2% dividend, man. I don't want No, man, I need to make some money. I want to buy a house for my family. What's wrong with you?
Yeah.
But the thing is, Max, is like I'm in my late 30s, right? And I tell people that it's crap, and they look at me like you're just dumb. It's like, dude, I've been around long enough. Like, and I'm one of these old people, like older people, not old people, but I'm one of these older people who have been around who have seen enough, and I've seen the game, and I see how they play it, and they manipulate people into buying shit that has no value. They're like, just float my bags, put your money here, it's safe, so that way my money stays safe. You know, your Warren Buffetts and all these other guys that have, you know, multi billions of dollars of you know, of assets and dollars, and same thing with like BlackRock and so on and so forth. Like they endless amounts of money. They're just in wealth preservation at the end of the day, trying to get a
Yeah.
4% on a year over year.
The problem is that in the past, you know, the primary source of income wasn't investing, it was work. You used to work and you used to get more wealth because of you added a value to the society with your work. And then that's raw capitalism. And you earned extra and you use that extra to preserve your wealth and maybe earn some above it. But at the end of the day, you made more with your work, your actual work, than the cost of your life. The problem is that nowadays, because of the fiat world, people are constantly over the time losing more than they make in the work because the assets inflate way faster than you know what you make in the work. You can actually like I love the alternative charts. You know guys that I make all these these weird pairs, and I love, for example, is the average, like if you're gonna divide SPX versus the average hours to buy the SPX, right? And you will realize the chart is going parabolic. And it used to be in a range since like for 100 years. For 100 years, it used to be like in a range, sometimes more, sometimes less, you know, whenever the market was either overbought, oversold. But now it's going vertical, and now you like when it was at peak, you used to need 40 hours uh, of work. Now you need 120 hours of work per
Yeah,
week.
wages have not even closely kept up with the cost of living, and that's the
That
major issue.
yeah,
Not
that,
even closely tracked. I don't know the
that
exact figure. I looked
yeah.
at this like a couple of months ago. People need to be making like 2.5 or 3 times as much as they're making now for it to be the equivalent of cost of living to income ratio back in like the 70s or 80s. I don't remember what the exact number is. Don't
It's
quote me.
Max. It's $40 an hour.
Well, real quick too.
Wow.
Let
So
me bring
what
this.
in most states that's like what 3 to 4 times the minimum wage,
Mhm.
depending on where
Let me
you live.
bring this up too, Max, just to add to your conversation. Not only that, the only thing that's been raising is minimum wage. Middle class has not moved at all. Middle class has literally stayed the same for like multiple decades.
Yeah, it's just like the big question is how does all of this resolve itself? Like how does it do we need
They're
an
they're
implosion for it to resolve itself, or
Yeah,
can it
yeah,
they're
we
they're
do
bringing the
need that.
poor closer to the middle class, and eventually the middle class will be poor too.
I know, but how does it resolve itself? That's what I mean.
Everybody's
Like,
poor.
does the whole
It,
system need to melt?
the whole system goes in the giant ineffectivity. And then when people are fed up, we going to transform into a commodity based money once again, and then we can restart. But first, I don't think there is going to be like a giant crash and everything just dies in 2 years that lots of bears are expecting, because the politicians don't want to see that. That would mean their heads ends up on a spike basically. What happens rather is that they sort of give people free currency, they give them free checks and so on, and they sort of like roll over this shit, and it gets more and more ineffective, more and more donations, more and more free checks to everyone, and the assets keeps appreciating, and at the end of the day it will take time. Just like the sentiment, the markets are one of the best ways to apply to real world. And just like you create a sentiment in the market with new higher highs and higher lows, you will need to create that bad feeling towards what's going on, where you sort of make lower highs and lower lows in the general psychology of the people, and then you will have enough will in the society to change something, but it's not there right now. So I still think that in the Western world, people need to things need to get worse before they can get better, and we can get back to some and it's always about sound money. Whenever you have sound money, you have prospering society. So
There's
yeah,
a saying, isn't there? You know, the I think I'm pretty sure I've said it on this show multiple times. The whole or bad times create strong men.
oh yeah,
Weak times create, or strong. Good times create weak men. Weak men create hard times. I mean, with markets, it's a microcosm for life, right? In the sense of cyclicality, right?
yeah,
You're always going to have the best of times eventually translate into, and that excess translate into the worst of times. But through that, you build a base that you can, build a constructive future off of.
yeah. And the good part is that, like, there is a good and bad part to all of this. The good part is that we are moving upwards in the long term. Like it's a humankind bull market in a way. We are moving from from a times when people used to believe that our rulers are gods, like in old Egypt and so on, to then slavery, to then democracy and so on. So basically, we are on a upward trend in humanity. The bad part is that right now we are in a bear market, basically. But I do believe new highs in our lifetime are ahead.
I sure hope so.
I'm very convinced. I'm very convinced. I just think that right now there is still more pain ahead. People are
You know what
still
the issue is, man,
too complacent.
is that governments can, lose track of money and there's no consequences. We all read about, like, oh, I'm not even going to name them. I don't want any trouble. I don't want any trouble. But there's some governments out there, and they consistently fail their own internal audits, and they misplace, hundreds of billions, if not trillions of dollars. And then, oh, next news story, no problem. It's like, that is so broken. Like, you spend 8 to 12 hours a day, sometimes more, working for money that a group of people can just lose billions and trillions of dollars of without any damages, any recourse, no rebalancing, no recollateralizing, just gone. And then at the same time, right, you'll have you'll have families in Hawaii who basically just lost everything in fires get $1,000 checks, and then Zelensky's just going to get like billions of dollars. And it's like, well, what if we gave all that money to Americans? I know Hawaii's far off of our mainland, but yeah, those are Americans, right? So it's all comes back to money, and how it's just the ones that control it completely disregard it, and they don't lead by example, in the sense that they don't put any importance behind it. They're constantly over budget. They're constantly, they're constantly in too much debt. They're constantly like blowing money and losing it. And, the rest of us, it's like, you need that same money, so it's like, it's almost like you're being spit in the face a little bit. They're spitting at you. It matters for you, but not for us. We can just have more of it because it's not real, but it's super real to you. You keep working for it. Keep dancing, monkeys. It's just
that's why I call it a giant Ponzi scheme, because the people at the top, who are at the closest source to the creation of currency, right? They benefit the most, and then who's paying for it? It's the working class, and I don't mean the working class for a government. It's the working class for a private sector that's paying all of this fun. And obviously the debt, which is the paying class, which is the working class for private sector of future generations. That's all the debt. But I love what Gordon Gekko said in the movie Wall Street from 1987, right? Michael Douglas. He said that wealth is not created here or lost. It's merely transferred. And that's where I think we are right now. That the wealth is being transferred. Slowly but surely by inflation.
I'm afraid that I don't own enough Caspa. Honestly, I might just buy here, even if it's a local top. I just want to own some.
Can't go wrong buying the top, man. Can't go wrong.
Hey, it's only the top for now. All right.
Yes.
All right. What do you guys say? We've been going an hour and a half. I need more coffee. Should we call it here? Save some for tomorrow.
Yeah, I say we share some alpha this week. I'm hoping I'm wrong, but I feel like this week might be a little bit choppy for markets. So I think we'll have plenty of time to talk about things.
Yeah, for sure. All right, I'm going to do one more shill. All right, I'm going to do one more shill. Guys, please consider liking the stream if you have not yet. I'm not going to go in too heavy with it. Just if you haven't yet, please consider liking it. Second, if you are new here, this is Market Check brought to you by Because Bitcoin. We go live here Monday through Friday at 10:50 a.m. Eastern time, live with this full cast right here. It's awesome, man. It's absolutely awesome. We talk charts, we talk narratives. Sometimes we get into higher time frame kind of conceptual discussions like we did today, which is always really fun. But yeah, guys, please consider subscribing as well. The reason we're able to grow so quickly is because you guys like our content, and also subscribe to the channel. You can be made aware whenever we drop a new video and we go live. So please subscribe. Furthermore, if you really enjoyed the content and you want to take a deeper dive into how to navigate these markets, the Discord that we offer is for you. Check out the first link in the description below. It's becausebitcoin.com/premium. It will take you to our website where you can sign up for our Discord. We share a lot of charts on YouTube and on Twitter and stuff like that. Where we really dial in the Discord is we focus on execution. Everybody can learn to draw lines on a chart. Everybody can learn to do TA at a basic level. But how do you actually apply that knowledge, and how do you actually place bets? So we provide you guys with a behind the curtains look at how we all do it and how we've been navigating these markets successfully for years. We have active positions channels where we give out plays and we transparently share basically everything that we're doing in these markets. So again, it's not a signals group, but if you choose to use it like one, I guess that's up to you. We more so do it in the spirit of transparency, and also you can learn from seeing how us as experienced market navigators and participants have successfully done it for years. So check that out. Link is in the description below. We are running a Black Friday sale right now. If you want to sign up, or actually it's probably better to just use the free month. I mean, it's kind of up to you, right? You could do one free month if you want to do that, or you can do 30% off for a year. You decide. If the free month is more important, that's okay. So you basically get like, what is that? Like 8% off, something like that over a year. But if you want 30% off for a year, we're doing a Black Friday sale. So that code is BFriday30 for 30% off. So I'll put that at the bottom of the screen. If you want 30% off for 1 year, Black Friday sale, I'm pretty sure it goes through the end of this month. We're going to close off the Discord at some point because it is getting a little bit crowded. So if you want to check that out and you want 30% off for an entire year and you want a behind the scenes curtain, we do 2 hours of private live calls every single day with our community. There is seriously not a Discord out there that works harder than us. And we're also rolling out some very cool products. And if you want to be an early beta tester of something called the BB Terminal, then you might want to hop in the Discord because that is going to be dropping. We have meetings scheduled actually today, working on that even more. So we are dropping some awesome products that will be included in this Discord membership in the very near future. Everybody's working very hard. Should be all set and ready before the Bitcoin halving, but it will be a truly revolutionary product. So anyways, thanks so much for being here. Like and subscribe. And you know what, Tommy, I'll just close this out, man. I already went on for so long. But guys, God bless. Farewell. Happy late Thanksgiving. Please like and subscribe. And again, use the code at the bottom of the screen, BFriday30, for 30% off of your Discord membership. Soon to include some other very cool features that we are adding and working on diligently. But that's a 12-month offer. So guys, thanks so much for being here. We will see you guys tomorrow at 10:50 a.m. Eastern time right here on YouTube. Take care.